The world isn't sleepwalking into a financial reset. It's sprinting toward one. Global debt has exploded past $315 trillion. The U.S. alone owes $37 trillion, and everyone in power already knows the truth nobody dares say publicly. This debt will never be repaid, not in 10 years, not in 50, not ever. But they're not panicking. They're preparing. They're constructing a new monetary system behind the scenes, building digital rails, revaluing behind closed doors, and setting up the biggest transfer of wealth in modern history, from savers to the state, from citizens to institutions, from the uninformed to the prepared. And here's what should terrify you most. The reset isn't coming in 20 years. It's not theoretical. It's not a conspiracy. It has already begun. For decades, the government told you everything was fine. Inflation under control, debt manageable, dollar untouchable. Meanwhile, interest payments quietly passed the defense budget. Bond markets started to fracture, foreign buyers stepped back, and central banks around the world began buying gold at levels we haven't seen since 1950, a sign of panic they'll never admit publicly. This video will show you the real playbook. Not YouTube hype, not crypto hopium, not doom storytelling. You're about to see the exact sequence of moves the United States is putting in place. 2025, infrastructure. 2026, stress. 2027, revaluation. 2028 to 2030, a new monetary regime. You'll see how gold and Bitcoin become engineered tools in a controlled devaluation. You'll see how CBDCs like the digital dollar and M-Bridge become the enforcement mechanism. And you'll see the one detail almost nobody online understands. The $630 trillion derivatives system that forces governments to coordinate the reset, not choose it. If you want the YouTube version, go to the competitor. If you want the version people inside institutions actually think about, keep watching. Subscribe to Retro Finance so you don't fall behind the only timeline that matters. Now let's break open the truth. Governments hope you stay too distracted to notice. You've been conditioned to think government debt works like household debt. You borrow, you repay, you cut spending. You tighten the budget. That mindset keeps citizens obedient. But it has absolutely nothing to do with how sovereign finance works. Governments never repay debt. They roll it. Every day, every week, every decade. Treasury bonds mature. The government issues new bonds to pay the old ones. Interest payments pile up. They issue more bonds to cover those too. The entire system functions because the public believes the debt is manageable, not because it actually is. But here's the truth. Nobody in Washington or the media will say out loud, the math has turned fatal. Interest payments alone now exceed the entire U.S. defense budget. Within 2 years, interest will hit $1.8 trillion annually. More than Medicare, more than national infrastructure, more than anything except Social Security. The United States is paying interest with new debt, refinancing old debt with newer debt, and pretending this is normal. There is no plan to repay $37 trillion. There never was. The only goal is to keep the public believing the dollar is stable long enough for the government to quietly engineer an escape route that saves the system and sacrifices you. This isn't mismanagement, it's strategy. Late-stage empires don't repay. They reset, and they do it without warning. Debt becomes unpayable in 2 moments, when interest outgrows revenue and when confidence outgrows reality. The U.S. has arrived at both. Every official projection shows debt growing faster than GDP for the next 30 years. Foreign buyers are stepping back. Japan, China, even the UK have reduced exposure. Domestic buyers, pensions, insurers, banks, are absorbing more treasuries, not because they want to, but because they're forced to by regulations and survival. Behind closed doors, every economist in D.C. already accepts the truth. You can't tax your way out of this. You can't cut spending in a democracy addicted to entitlements. You can't grow fast enough to outrun compounding interest. So instead of solving the problem, they're reframing the system. They'll sell you new language, strategic reserve pricing, sound money transition, digital modernization, currency stabilization. It's camouflage. The real operation is simple. Make the dollar worth less so the debt becomes smaller. This is not a theory. It's the playbook used in 1933. America, 1971 America, 1980s Latin America, 1990s Asia, 2020 Turkey. The U.S. is not immune. It's just better at hiding its panic. And the institutions coordinating the next stage aren't in Congress or the White House. They operate far above both. When resets happen, presidents don't lead them. Central banks don't even lead them. The real command center is in Basel, Switzerland, a building most people don't even know exists. The Bank for International Settlements, the BIS, is the central bank of central banks. It sets the rules that all other banks obey: reserve classifications, global risk weights, cross-border settlement norms, capital buffers, and crisis protocols. You know what Congress votes on. You have no idea what BIS decides. Yet BIS decisions shape the value of your currency more than any law passed in your country. It was BIS that rewrote the definition of gold as a Tier 1 reserve asset under Basel III, restoring gold's monetary importance. It was BIS that coordinated global liquidity after 2008. It was BIS that pushed the world towards CBDC interoperability through the Bridge project. Then there's the IMF, the emergency room of global finance. They don't print dollars, they don't vote on budgets. But they do issue SDRs, synthetic international money created at will. In 2009, they issued $250 billion in SDRs overnight. In 2021, another $650 billion. These were test runs, dry rehearsals for global monetary resets. The G20? They provide political cover. Every coordinated policy framework you see at G20 summits is simply the public version of decisions already made inside the BIS and IMF. This is why the 2025-2030 timeline isn't speculation. These institutions don't wait for crises. They prepare the architecture years before the public notices. And right now, the architecture is built. The rails are installed. The test runs are complete. The only thing missing is the event that justifies pulling the lever. That's what the U.S. debt spiral, global inflation, and emerging market instability will provide. Every collapsing empire reaches a point where the math stops responding to policy. The U.S. crossed that line quietly. No headlines, no speeches, no warnings. Just a silent shift from managing debt to surviving debt. Here's the part they hope you never understand. Most U.S. debt isn't owned by other countries. It's owned by Americans, indirectly. Pension funds holding treasuries, insurance companies holding treasuries, banks holding treasuries, money market funds holding treasuries. Even Social Security trust funds are stuffed with treasuries. This means the government doesn't have to default on foreign creditors. It can default on you through inflation without declaring a default at all. The real danger lies in rollovers. The U.S. debt has an average maturity of just over 6 years. That means trillions must be refinanced every year at higher interest rates. Higher rates, higher interest bill, more debt, more rollovers, higher rates again. This is a death spiral, and the government knows it, which is why they're setting the stage for a reset disguised as policy modernization. Everyone in D.C. understands the options. Raise taxes, political suicide, cut spending, impossible in a country built on entitlements. Grow the economy, too slow, shrink the debt in real terms? Yes, but only by shrinking the dollar. This is why they're building the new system. This is why they're normalizing digital rails. This is why they're accumulating strategic assets quietly behind the scenes, not to strengthen the old system, to replace it. Resets don't happen in a single moment. They unfold like a controlled demolition, scaffolding first, cracks second, collapse third, rebuilding last. Here's the actual path unfolding right now. 2025 is the setup year, a year where nothing dramatic appears to be happening, and everything essential is happening in the background. FedNow spreads across the banking system, giving the government instant settlement capability. The BIS runs Bridge tests with global participants. Central banks continue their gold buying spree. Language shifts subtly. Innovation, modernization, digitalization, stability. Everything looks calm. And and that's intentional. You can't announce a reset during calm. You build the infrastructure quietly. 2026 is the stress year. Bond markets shake. Foreign demand weakens. Japan faces interest pressure. Italy wobbles. China's hidden debt starts leaking into global markets. Inflation reignites despite rate adjustments. BRICS amplifies its alternative settlement narrative to put pressure on the U.S. Stress creates political justification. No government introduces radical monetary change unless the public feels fear. 2027 is the action year. The year narratives flip. The year stability measures replace old language. The year strategic gold and Bitcoin reserves become public tools. The year CBDCs transition from pilot to necessity. The year the U.S. announces new reserve valuations for the sake of confidence, not as a collapse, as a solution. Their message will be polished. We're strengthening the currency, securing the system, and ensuring global leadership. The reality is brutal. They'll be cutting the old dollar loose and pricing debt against a revalued reserve asset, shrinking their liabilities while erasing your purchasing power. The blueprint isn't hidden. It's simply unrecognized. Forget the fantasy. The government isn't adopting Bitcoin or gold because they believe in hard money. They're adopting both because they can reprice them. Gold is the stability lever. Bitcoin is the velocity lever. Gold is on the U.S. books at $42.22 per ounce, an absurd 50-year-old number. At market price, U.S. gold reserves are worth over $700 billion. At a revaluation of $10,000 per ounce, those reserves become $2.6 trillion. At $20,000 per ounce, more than $5 trillion. This isn't speculation. This is the same technique used in 1934 when the U.S. revalued gold by 69% overnight to shrink its real debt. Bitcoin is the modern version. The government already holds hundreds of thousands of seized coins. They could easily accumulate more through fines, seizures, or mining without moving markets. Then they assign a reserve valuation far above market price, not to pay debt, to offset it. Gold and Bitcoin revaluation isn't bullish. It's not a win for citizens. It's a sign the dollar underneath you is being intentionally weakened. Your competitor told a dramatic story, but this is the real story. Revaluing hard assets is the most efficient way to shrink unpayable liabilities without triggering panic. The moment you see gold or Bitcoin suddenly repriced for stability, you'll know the reset has passed the point of no return. People think inflation is an accident, a mistake, a sign that policymakers lost control. That's a fantasy crafted to protect the system's image. Inflation is the mechanism, the pressure valve, the stealth tax, the only way a government can destroy its debt without declaring bankruptcy. They don't need to tell you they're defaulting. They just let the prices rise while your wages lag behind. The government pays its debts in devalued dollars. You pay the difference with your life savings. Inflation is the most politically convenient crime in the world because it doesn't feel like a crime. There's no headline that says, "Your savings were just reduced by 12% this year." There's no press conference where the Treasury says, "We diluted your currency so we could survive." Instead, they blame supply chains, they blame pandemics, they blame oil, they blame corporations. They blame everything except the actual mechanism, monetizing debt through inflation. It works because most people only look at nominal numbers. They see their salary went up 5%, their rent went up 7%, groceries went up 12%, savings yields went up 2%. They don't see that the arithmetic is killing them. Inflation isn't the system losing control. It's the system taking control of your wealth. And when inflation alone can't shrink the debt fast enough, governments move to the next phase, asset revaluation. But before that trigger is pulled, the world's most fragile major economy is showing us the preview. If you want to see the future of the U.S., look at Japan, a country that has survived on monetary oxygen for 3 decades. Japan isn't just indebted, it's mathematically beyond repair. The debt-to-GDP ratio is over 260%. The Bank of Japan has been forced to suppress yields artificially for years. The entire Japanese bond market was frozen at one point, No buyers, no sellers, just policy intervention masking reality. Japan is the only major nation that no longer has a functioning free bond market. The central bank buys most of the debt, not because it wants to, but because nobody else will. This is what the end game looks like, a government propping up its own debt market while pretending everything is stable. Japan survived this long only because global inflation was low for most of the last 20 years. But that world is gone. Inflation is now global, structural, and persistent. If Japan ever loses control of its yields, even by 1 or 2 percentage points, the entire system detonates. The yen collapses. Bond yields spike. The Bank of Japan prints on an unimaginable scale, and Japanese citizens get wiped out. If Japan cracks, the shock will tear through U.S. bonds, European banks, global liquidity, currency markets. Japan is the warning. The U.S. is on the same trajectory, just with delay and better branding. The difference? The U.S. has a global monopoly on the dollar and can weaponize revaluation tools. Japan can't. Which is why the U.S. is preparing a coordinated geopolitical response before the cracks reach it. Your competitor treats BRICS like a looming replacement for the dollar. That's not the truth. BRICS isn't trying to dethrone the dollar. They're trying to pressure the dollar. The BRICS strategy is leverage, not dominance. China knows the UN cannot anchor the world. They have capital controls, hidden debt, shadow banking, and an opaque financial system. No nation voluntarily stores its wealth in a currency with government capital gates. But China does have one advantage: gold, a lot of it. Officially, China claims around 2,200 tons. Unofficially, analysts estimate 4,000 to 6,000 tons, with private Chinese vaults likely holding thousands more. China doesn't want to replace the dollar. It wants a seat at the table when the dollar gets restructured. Russia is the commodity engine. Sanctions force them into gold accumulation and non-dollar oil deals, not to destroy the dollar, but to survive the transition. India is the unpredictable one. It will never support a Chinese-led system, but it doesn't want total U.S. dependency either. Saudi Arabia is the quiet kingmaker. When they experiment with yuan oil trades, they're not rebelling. They're renegotiating. BRICS is not a new empire. It's a negotiation bloc forcing the U.S. to acknowledge the obvious. The dollar must be reformed or risk losing global consensus. The United States sees all of this, and rather than fight BRICS directly, it's preparing a reset that reinforces its position, but under new rules, new valuations, and new digital control mechanisms. Gold and Bitcoin revaluation shrink the debt. CBDCs lock the system down. BRICS pressures the timeline. Everything is converging toward a single inflection point. Gold shrinks the debt. Bitcoin expands the balance sheet. But CBDCs control the population during the transition. This is the part your competitor completely ignored because they don't understand the institutional layer of a reset. A currency reset isn't just about repricing money. It's about controlling the flow of money while repricing it. That's why CBDCs aren't optional. They are the enforcement mechanism. The U.S. didn't launch FedNow for speed. Banks already had instant payments. FedNow is the rails for the digital dollar. Programmable money tied to identity, capable of being tracked, limited, or redirected. China's digital yuan is already operational in multiple provinces. Wages are paid in it. Loans are issued in it. It doesn't just track transactions. It can restrict them. Europe is building the digital euro, designed with spending categories and identity-secured wallets. They aren't even hiding the control features. And above them all is BIS Project M-Bridge, the multi-country, multi-bank CBDC settlement platform that quietly links China, Thailand, Hong Kong, UAE, and observers, including the US. You don't build M-Bridge unless you're redesigning global settlement. You don't build FedNow unless you want real-time enforcement. You don't build a digital euro unless you want programmable monetary policy. Once the reset begins, cash becomes a problem. People would hoard it, withdraw it, transfer it, shelter it. CBDCs eliminate all of that. During a revaluation, They give governments full control over what you can buy, how much you can move, how fast money circulates, and whether your money expires. CBDCs aren't a modernization. They are the operational cage for the new monetary system. Behind the global financial system sits a risk no politician will ever speak about and no mainstream YouTuber even understands, because it's too technical, too big, and too terrifying. The real reason governments need a coordinated, not chaotic reset is because of the $630 trillion global derivatives market. Derivatives are not bets. They're obligations. Every major bank on earth is tied into them. Interest rate swaps, currency swaps, gold swaps, futures, options, credit derivatives, commodity hedges. If gold jumps from $2,000 to $10,000 overnight, those gold derivatives don't just lose money. They break. Counterparties fail. Insurance fails. Clearinghouses fail. The same applies to Bitcoin once its financial derivatives deepen. If Bitcoin is revalued too abruptly, levered institutions choke instantly. This is why governments cannot allow a free market hard reset. If gold reprices violently on its own, the derivative cascade would spread globally, a financial chain reaction bigger than 2008. This is why a controlled revaluation is necessary, a gradual repricing under coordinated rules inside a CBDC-enforced environment, with central banks prepared to absorb shock through new digital mechanisms. The system can survive a reset, but it cannot survive a derivative implosion. This is the institutional truth your competitor doesn't know and your viewers have never been told. Revaluing the dollar is not the scary part. Revaluing gold and Bitcoin too fast is. The $630 trillion derivative ecosystem forces governments to rewrite the currency carefully, not chaotically. This is why the BIS runs global coordination. This is why mBridge exists. This is why CBDCs are inevitable. The reset isn't about ideology. It's about preventing systemic collapse. Every country with too much debt ends up standing at the same crossroads. 3 doors, none of them pleasant, none of them optional. Door 1, default. Admit the debt cannot be paid. Trigger global panic. Destroy markets. End your political career. This door is suicide. Doctor 2, austerity. Cut spending / benefits, collapse your economy, enrage your population, and destabilize society. In democracies, austerity is a death sentence for any ruling party. This door is political suicide. Doctor 3, devaluation. Print money quietly. Let inflation run hotter than admitted. Revalue strategic assets. Shrink debt in real terms. Blame everything except monetary policy. This door is survival. It protects the government. It protects the banking system. It protects elite asset holders. And it forces the cost onto the middle class, slowly enough to prevent revolt. This is why every country from Weimar Germany to Argentina to Turkey to Egypt to Zimbabwe followed the same pattern. Inflate, revalue, reset, pretend nothing happened. The US will not break this pattern. It will follow it, with better technology, smoother marketing, and global coordination. Devaluation is not a failure. It's the strategy. Inflation is not the problem. It's the solution. CBDCs are not about convenience. They're about enforcement. This is why the reset is guaranteed, not because politicians want it, but because nothing else is mathematically possible. The only choice left is how the reset happens and how much of your wealth survives it. Currencies don't collapse because of numbers. They collapse because of belief. Currency is a story everyone agrees on, until one day they don't. The US dollar doesn't die when inflation hits 7% or 10% or even 20%. It dies the moment the public realizes those numbers aren't temporary, Sundrian, or accidental, but structural and deliberate. That realization is the real trigger. It starts small, a few price spikes, a few headlines about bond auctions, a few whispers about foreign countries dumping treasuries, a few banks tightening credit quietly. Then it accelerates. People begin withdrawing more cash. Foreign investors hedge against the dollar. Pension funds grow uneasy. Bond yields jerk violently. The language coming out of DC changes, subtle at first, then unmistakable. and trust begins to evaporate. Banking crises don't start with insolvency. They start with psychological cracks. SVB wasn't a balance sheet event. It was a confidence event. In 2022, when UK pensions nearly collapsed, the Bank of England stepped in instantly, not because the math demanded it, but because trust was slipping. When trust breaks, everything breaks at once: the currency, the bond market, the savings of ordinary people, the political narrative itself. Governments understand this better than citizens, which is why no reset can proceed without a mechanism that lets them contain panic, freeze movement, and steer public behavior. That mechanism is digital money. CBDCs aren't just a tool. They are the seatbelt system for the coming crash, designed not to save you, but to keep you from flying through the windshield when the old system hits the wall. Once trust collapses, control must rise. History has never worked any other way. At some point, the government will stop patching the old system and start unveiling the new one, not as a reset, but as a solution. It won't be announced with drama. It will arrive disguised as modernization. Gold will be repriced, framed as strengthening America's balance sheet. Bitcoin will be assigned a strategic reserve value, framed as embracing innovation and securing digital leadership. CBDCs will be rolled out, framed as efficiency, safety, and fraud reduction. Nothing will look like a collapse. Everything will look like progress. The average citizen will have no idea what happened. Their bank balance will still show the same numbers. Their paycheck will still arrive in dollars. Stores will still accept digital payments. But underneath those familiar surfaces, three things will be permanently different. The first is purchasing power. The new dollar will buy less, dramatically less, because that's the only way the $37 trillion in U.S. debt becomes manageable without a catastrophic default. The second is control. Transaction visibility becomes total. Privacy becomes a relic. Liquidity becomes permissioned. Every dollar becomes trackable, steerable, and programmable. The third is global balance. The U.S. dollar will still sit at the center of the world, but no longer as an unquestioned king. More like a regulated hub supported by gold, digital assets, and international settlement networks like mBridge. People won't call this a reset. They'll call it a reform, a modernization, a stabilization. But the truth is simpler. It will be a new monetary regime born from the failure of the old one, engineered to save the system by sacrificing the currency and everything denominated in it. Most people won't prepare because they're waiting for permission. An official announcement, a headline, a televised warning. They will wait until they see the fire, not realizing the house has already been burning quietly behind the walls. You prepare now or not at all. You reduce exposure to dollar-denominated savings, not by panicking, but by shifting strategically. Cash loses value fastest. Long-term savings lose value quietly. Retirement accounts melt in real terms, even as the numbers look stable. You increase exposure to hard assets, physical gold, Bitcoin secured privately, productive land, essential commodities, assets that survive inflation because they are inflation. You diversify internationally. One currency is a trap. One banking system is a risk. One national policy is a vulnerability. You spread exposure across countries that historically manage debt better. Switzerland, Singapore, Norway, select Asian markets. You manage debt with intelligence. High-interest consumer debt can sink you fast, but long-term fixed-rate debt, especially on real assets, becomes a gift during devaluation. You repay in cheaper dollars while the underlying asset rises. You develop skills that earn regardless of currency. In resets, money loses value. Skills gain value. People pay for what they need, not what they want. The more useful you are, the more insulated you become. You build networks. When currencies shake, communities become the real safety net. People with connections survive transitions far better than people with savings alone. And finally, you emotionally detach from the old world. The financial system you grew up with is not the one you will live the rest of your life in. The reset isn't the end of the world. It's the end of a system and the beginning of a new one. The people who win are those who accept that early enough to act. Most people talk about the reset like it's an event, a sudden shock, a single headline, a dramatic moment when the world wakes up and everything changes at once. That's not how monetary systems die, and it's not how this one will be reborn. The reset isn't a switch. It's a trajectory, a direction the world is already moving in, step by step, choice by choice, policy by policy. It began the moment global debt passed the point where conventional solutions stopped working. It accelerated when central banks started buying record amounts of gold. It solidified when FedNow launched, when M-Bridge testing expanded, when nations quietly began exploring CBDCs, and when the U.S. Treasury publicly acknowledged the need for digital modernization and strategic asset valuation. The puzzle pieces are already on the table, gold being treated like money again. Bitcoin being framed as a strategic digital asset. CBDCs giving governments the ability to steer, freeze, or accelerate money. A derivative system too large to unwind without coordination. A bond market too fragile to sustain higher rates. A middle class losing purchasing power faster than wages can recover. A geopolitical world splitting into clusters that all want leverage over the dollar, not its destruction. Every piece pushes the system in the same direction. Every pressure point forces the same outcome. Every institutional response brings the reset closer. There is no conspiracy. There is no secret group plotting in darkness. This is the unavoidable arithmetic of a global system that ran out of easy years, cheap debt, low inflation, and infinite trust. The reset is not optional because the current system cannot survive unchanged. The question was never if, it was always how and when. And now, you know both. Governments won't announce this, central banks won't warn you, media won't decode it. They need you calm, compliant, and unaware while the architecture shifts beneath your feet. But you've now seen the blueprint, the debt trap, the BIS coordination, the digital rails, the revaluation tools, the derivative risks, the geopolitical pressure, the psychological triggers, and the survival demands. The world is not preparing for a reset, it is living inside one. The only difference between those who survive and those who get flattened is simple: awareness. If you want to track the indicators before they reach headlines, before they hit markets, before they break the currency in your pocket, then subscribe to Retro Finance, because this channel will not comfort you, distract you, or sugarcoat anything. It will simply show you what is actually happening, when it happens, and why it matters, long before the world figures it out. The reset is no longer a theory. It's the operating system of the decade. Stay alert, stay informed, stay ahead.